the Financial Survival Network. Now more than ever.
And welcome. You are listening to Watching the Financial Survival Network. I'm Kerry Lutz. And, well, is the petrodollar dead? Long live the petrodollar. Will the Fed really raise rates 6 times this year? A target rate of 2.8%? Are we heading into a recession, or are we in one already? Let's answer those questions and more. It's important to you because how you handle the existing economic conditions is going to determine you and your family's future. John Rubino, dollarcollapse.com, is with us. John, happy Monday. So the world, you think just when it can't get any worse, it gets worse.
Hey, Kerry. Oh man, are we making mistakes? This is so shocking that we could be this dumb. And by now, especially, after you and I have been talking about this for like a decade about how the mistakes we're making, we should be used to extreme stupidity on the part of the guys in charge. But this just this goes beyond anything. And specifically, although there's a lot of other things going on, but specifically now, I'm referring to how we're behaving towards the financial markets. The dollar is the world's reserve currency. You have to have dollars to buy oil. You need treasury bonds in your central bank reserves if you want to have a well-backed currency, all that stuff. And yet we're abusing that privilege on such a scale. We're producing double-digit new dollars each year. And in the last couple of years, it was mid to high double-digit growth. And we're using the dollar as a weapon. In other words, when anybody offends the U.S. military industrial empire out there, we cut them out of the financial markets in some way. And with this Russia thing here, what we've done is we're trying to kick Russia out of the SWIFT bank settlement system. In other words, their banks no longer are able to function internationally, and we froze some of their global reserves, some of their monetary reserves. In other words, their monetary reserves are no longer their monetary reserves. We reserve the right to take them away. And yet we expect the world to continue to consider the dollar to be the rock solid reserve currency that it has sort of been in the past. And we're finding out the world doesn't have to go along with this. Saudi Arabia now is starting to consider taking other currencies in return for oil. So there goes the petrodollar, right? And a lot of other countries are loading up on gold right now. Central bank gold buying is ramping up. Russia had to actually get out of the way of its citizens so they could buy gold because there's so much demand there. And so what you're seeing is a mass shift away from the dollar and the other big fiat currencies by implication that is being brought about just by our own stupid mistakes in the short run here. It was going to happen eventually anyhow because we were making these kind of steady, stupid moves like borrowing too much money year after year and creating enough new currency to cover the debt that was, that kind of thing. But now we really ramped it up. And so the consequences are liable to be felt a lot sooner. And, watch Saudi Arabia now. If they just open their doors to other currencies and say, okay, look, whatever country you are within limits, just give us your currency and we'll give you our oil. And then boom, that's going to be a huge deal when it happens. And we may not be that far from that.
Yeah, it's very possible. And wow, if that happens, man, all bets are off. And it's just amazing that they let it get to this point. You almost think they're doing it deliberately.
The whole planning behind the trend thing is pretty interesting. I mean, so much of what's happening is statistically so unlikely. Like these sequential crises that where one comes right on the tail end of the other to keep half the population completely freaked out. And it's the same half of the population. Trump got elected, which was an existential crisis for, let's say, 45% of the US population. And then when Trump's on the way out, COVID comes along And that freaks out those same people and gives the government the opening to do all kinds of authoritarian things. And then when the COVID thing starts to fade, the Russia-Ukraine thing starts and freaks out the same group of people and gives the government the rationale for doing a lot more aggressively authoritarian stuff. So it's, it's interesting. It's I don't know how you would calculate the odds of something like that, but it seems very statistically unlikely that you would have 3 crises appearing perfectly sequentially and freaking out exactly the same group of people in each case. So I don't know. I wonder what's next. What would you bet on, Kerry? I think that a cyber attack is probably the most likely, but there's a whole bunch of other things that could happen.
I don't want to even think about if the internet goes down, because we'll have to end our interviews, John. That would be the biggest tragedy.
What would we do? I hadn't thought of that. We got cell phones. So
Yeah,
if our cell phones are still working, we'll do that really kind of a tinny voice
or we'll
thing
do Apple FaceTime, but that's through the internet. So we have
through the internet. That's right.
Yeah, Skype will be gone. All these things will be gone. I don't know what we're going to do. We'll have to just we'll do it like a Radio Free Europe kind of interview.
How are they going to freak us out if there's no internet? If you can't log on to Facebook and be served up what the algorithm thinks is most likely to trigger you, then you might not get triggered. It might be a more peaceful time if the internet goes down. This might be like that working from home thing where everybody got kicked out of their jobs during the pandemic and they ended up having to work from home, and they found out that's a lot nicer, than working in an office. So maybe if the internet goes down,
they did us a favor, John.
Well, it could be, let that go on for 6 months and we'll be like, look how big my tomatoes are. Oh man, I just, I sat there and drank a glass of whiskey as the sun went down. This is a nice life, and I have all this free time without staring at screens. So they could be ruining it for themselves if they use that as the next crisis.
Yeah, and you can't let a crisis go to waste. You know that. But yeah, like certain things, they thought they were really upsetting people not going to the office. As it turned out, nobody knew they didn't really want to go there anyway until the pandemic, right?
Well, yeah, and anybody who's done both knows that there are a lot of advantages to working at home, because when you have an office job that you commute to, you got to wake up early and get all cleaned up, which is, no small process for a lot of people, and dressed up and everything. And then you've got to somehow, drive in heavy traffic to get you your job. And so you're stressed out before you even start your job. And then you're in an office where, everybody's talking to you and everything. So you don't get as much done because you've got to, your social life is there, and it's not a great social life, but it's there. And then you've got to drive back home when you've been stressed out all day long, and you think that's normal life. But then you do your job at home for a while and you realize that you've got like 3 extra hours a day by working at home. And that's a big 3 hours, the marginal 3 hours of your day, if they're given back to you, that's a huge change in your life. So, a lot of people discovered that, and they have no interest in going back to their commute and their office relationships and everything.
For good reason, too. Yeah, talk about the law of unintended consequences, eh?
Yeah, well, and so much of this appears to have unintended consequences, unless there's a deeper plan here, Kerry. You can't discount the idea that all of this stuff that we think of as gigantic mistakes is actually being done on purpose to serve a much deeper, much longer term, much scarier goal. I'm kind of on the fence about this now, just because of what we talked about before, the sequential, highly unlikely series of crises that we've seen. So it's possible that the consequences aren't actually unintended, that we do mean to destroy the fiat currencies of the world. We do mean to disrupt the supply chains that we took the last 20 years building, because there's something on the other side of that we really want. And, Great Reset is the obvious candidate for that they'll impoverish us, they'll terrify us, and then they'll step in with a new set of rules and regulations and objectives, and we'll be so softened up that maybe we'll go along with it. I don't know. It's confusing at this point.
You know what? Like Klaus Schwab said, you'll own nothing and you'll be happy. This is a case where maybe Bix Weir has been right all these years that they really did want to crash the dollar, but maybe he's been right for the wrong reasons. Hey, so are we in a recession already?
We might be. The economy's slowing down dramatically, according to some measures, like the Atlanta Fed's GDP Now report is hovering around zero for this quarter. And you've got the Fed raising interest rates into that slowdown and long-term interest rates going up dramatically into that slowdown, and the price of a lot of things going through the roof, which means people can buy less of it. Even though in GDP terms, when you buy less of something that went way up in price, maybe that's a wash and GDP doesn't change, but you actually got less stuff for more money. And that impoverishes you. So they're impoverishing us on a lot of different levels in a lot of different ways. And frequently that leads people to spend less, which means we could have an economic slowdown here. Which means stagflation. There's a name for what might come if inflation is still in the low double digits and consumer spending in terms of the amount of stuff we're getting goes down. That's the 1970s all over again. And that was a terrifying decade because it felt like things were completely out of control. And the only way we brought them back into control was to raise interest rates to the mid to high double digits. We had 18% interest rates on some instruments. Actually, my first job in finance was as on the trading desk of a German bank in New York City in 1980. And we were trading short-term bank deposits that had yields of 18 to 20%. And I didn't know anything. I just, I didn't know that was crazy, but it was crazy.
That's normal.
Yeah. When you're a beginner, that's why Wall Street likes young guys because we don't know anything. So we'll pay anything for whatever's moving because we don't know how much it's supposed to cost or what it's actually worth. And so I was one of those guys back then. And yes, we raised interest rates to 18%, and that saved us. We can't do that this time. So if we start to spin out of control, we have no tools left. And that's not really a long-term thing now. That is something that could happen this year. I mean, if we dip into a recession in the first, second, and third quarters, while long-term interest rates continue to go up because people are so freaked by inflation, geopolitics, et cetera, and we're right back there with no tools to get ourselves out of it. So this is a very big, very scary deal from a financial standpoint. So, Kerry, buy gold, buy silver.
Yeah,
and then hide out. This really makes the precious metals thesis here.
And have faith, and somehow it'll work out. But recession, we got $110 oil. That alone is enough to throw the global economy into a recession, even though the economy as a whole is not as dependent upon petroleum energy as it was, because natural gas has been substituted for so much. But nat gas is skyrocketing. In the US, there's a substantial discount per BTU for using nat gas. According to Charles Nenner, that's going to disappear. Then you got rising food prices, rising rates. I mean, all these things. You asked the question, will the global supply chain ever go back to pre-COVID normal?
Yeah, well, let's start with the food section or the food thing and then go back to the supply chains, because we have a possible food crisis going on right now. And the kind of headline version of this is that Russia and Ukraine are big agricultural product exporters. Wheat, corn, soybeans, and fertilizer. They're all really big in those markets. So you take them out of the equation, which is what has happened with sanctions and the war itself. And the price of those things can't help but go up, which means the price of everything those products go into will be higher. So this year we might see really dramatic food price increases, even if some of the other commodities like nickel kind of stabilize, or oil or whatever. So we got a potential food crisis going on at the same time that these supply chains that we build. And then, these guys are so stupid. If they're doing this without a plan, destroying the world's supply chains is incredibly stupid, because we took the last couple of decades to build them up, where we set up these incredibly complex, incredibly far-flung supply chains that go from country to country to country and create an incredibly efficient production network because everybody's doing what they're best at out there, comparative advantage.
Specialization. Yeah.
Yeah. Now we're using the dollar and the financial system as a weapon to punish countries who are in those supply chains, so we're yanking them out of these complex and therefore fragile supply chains, where if one link breaks, the whole thing goes down. And so we're breaking those links on purpose, apparently, or obliviously, one way or the other, but we're actively breaking those links. And so you're going to see supply chains either collapse or be dramatically impaired in the year ahead because of all these sanctions. And I don't think we're ever going to go back to pre-pandemic normal in terms of supply chains, because people have learned that it's a really bad idea to depend on something that fragile and that easily disrupted by malevolent governments out there. So we're going to embark on a process of bringing production back home, whatever country we're talking about. We're going to want to make a lot of our crucial stuff ourselves. And we're going to feed that process with supply chains that are secure. Like in the US case, we want to get more stuff from Canada and Mexico because we have an element of control over those things or over those places.
Yeah.
And so we're not going to want to buy things that are sourced in one country and processed in another country and assembled in a third country before they ship them to us for whatever we do to them. Because that's too dangerous. So we're going to want to shorten and compress the supply chains and bring manufacturing back home. But you can't do that right away. That's a
multi-decade process.
Oh, yes. Yeah. And an expensive one, because the reason prices have been so well behaved is that these supply chains took advantage of incredibly cheap labor in lots of different places, among other things. And we're going to do away with that to an extent. We're going to bring these things back where labor is much more expensive, but it's much more secure, but we're going to pay up to do it. So prices will rise because of this process for a long time until we get it nailed down. And so that's kind of embedded inflation. The agricultural thing is kind of embedded inflation. Energy is probably embedded inflation. So we're going to have rising prices in a lot of different aspects of the economy for much longer than maybe seemed likely when we were thinking, well, it's just a COVID thing. As soon as we get over the pandemic, then things will go back to normal. Apparently not. That's not going to happen. So inflation of one kind or another from one source or another will be with us for quite a while, I think.
Oh, no question about it. Nenner says 20, 30 years. It was with us 20, 30 years. Last time it started in the 60s, and by the time we got to the 80s, that's when interest rates went up to 20%. But really, once it gets started, then you get inflationary expectations built into the system, and you start making decisions based upon the expected future loss of purchasing power. So you move up purchases to now because it's cheaper than it's going to be down the road, maybe next week, maybe next month, and you borrow lots more money because you get to pay back cheaper dollars. Hey, and along the lines of credit, the federal government has ordered the credit bureaus to remove all references, or virtually all references, to past due medical debt on consumers' credit reports, which has the effect of, perhaps artificially, you could have an argument about that, increasing their credit scores so they get more credit, so they get more in hock. Hey, the next wave of bankruptcies will be nothing like the wave before. It'll be 5 or 10 times higher, John. And maybe I'll go back to practicing law and start becoming a bankruptcy lawyer again.
Oh yeah, that's going to be a growth field pretty soon here, because we'll have that decade of massive bankruptcies. Of course, then the bankruptcy lawyers will be replaced by AIs. But for 10 years, it'll be a gravy train. You should totally do it. Of course, that's kind of, I don't know, is that a depressing job? Working with bankrupt people and seeing their lives be destroyed and everything?
I never really I did a few bankruptcy cases. I never really specialized in it. It's a bottom feeder thing. I'm wondering if there's an AI that could replace you and I now and we'll just send the AIs to do the interviews, John, because that's what we're coming down to here.
Cheap labor, bring it back home. Yeah.
Yeah.
See, that's a conversation for a little later in this process, but it's a real thing. I mean, more and more stuff is being replaced by robots and artificial intelligence, and it's moving up the food chain. At the lower level of most knowledge-based industries, you can automate it now. Like a paralegal's job, part of what they do can be automated. Medical diagnostics can, to an extent, be automated now, and yeah, it's just going to move upward from there until it gets into the real meat of a lot of these knowledge-based industries. And well, we'll see. Maybe there will be new jobs at that point, but I don't know. I wonder if that process runs out of control.
Hopefully you and I will be retired by the time the AI is able to replace us, and we'll be making money on AI stocks. It's about all you can do. Make sure you go over to John's site, dollarcollapse.com, for the latest insights into the things we've been talking about, and sign up for his free newsletter as well as ours, financialsurvivalnetwork.com. You got a question for John? Shoot an email or post it in the YouTube comments, kl@kerrylutz.com. John, we'll talk to you in a couple of weeks.
Great. See you, Kerry.
The Financial Survival Network. Now more than ever.